Good evening, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for Thursday, and we're at the 6th of February, 2025. Well, tomorrow we're going to get some interesting data. I'll go into Amazon and all that in a minute, but we get the January non-farm payroll in the morning. Everybody's going to look at that. They want to see, is the market just holding? They're looking for 170,000 new jobs and an unemployment rate sitting at about in the neighborhood of 4.1%, still basically full employment. We'll have to see what the wages do. That'll be maybe one of the wild cards. The December wholesale inventories and sales data will come out. That's at 9 o'clock. University of Michigan, the February preliminary consumer sentiment numbers, that'll be looked at 9 o'clock. And the Federal Reserve at the end of the day will release the consumer credit for December again. So we've got some older data with some of it, the credit data and the wholesale inventories, but the rest is pretty right where you're at. So that's going to be very, very important. Now, today at the end of the day, we saw the Amazon earnings and what they did and their spending. And I don't think the earnings were the problem. It's the spending that the market didn't like. And they took the stock down. It's down about 3% in the aftermarket right now because they said they're going to keep spending even more, over $100 billion for the year. I think they were up to 75. They were saying that they would spend. And I think they spent $26 billion in the last quarter. So I see them as just rolling it out and saying, just like Meta, hey, we want to be in this game. We have the cash to do it. We believe this is where the big bucks are. This is the next frontier, and we're not going to miss out on it. That's what I think is going on. As for how we're doing in other markets, we just saw Tesla was down. It came back off the lows, $11, by the way. NVDA growing again, up 385 today. Uranium's gone nowhere day after day, as you could see. Meta, this is just an unbelievable rally. It's very long in the tooth. Be careful with it, okay? Now you're getting to the point where the air gets very thin up here. That's not to say down the road it can't go past this, but it hasn't corrected, and that's bothersome. As you know, I was looking for the gold market to give a correction. It did, but I was hoping it would stay a little lower than this. It's just still very much a bull market. Copper's also stayed very strong with this. We saw that Ford gave back 75 cents. Yesterday's numbers, and if you saw Bill Farley talking about it, nothing's really pretty going on for Ford at this time. Yet the GM held on and Rivian held on. So sort of interested. It depends, I guess, where you're at for what you want to do. When we look at Meta, the market has come up here, and you've got to be a little careful now. This market's run rather dramatically since January. I mean, this is a stock that was 580 or so, and now you're 711. I'll let you want to buy that, because where do you put in a stop when it breaks and gives you that one-day big thrust? If you can get one, that might be the time to come into the downside. It'll be hard to get back under 675 and a quarter without doing some damage to the chart. The market's overall the key moving averages, and what's holding the market right now is the market finally, it moved a week ago underneath the Bollinger Band, and now it's just running under it. That's still a very bullish story with an embedded reading. So as much as I'm telling you, no, I'd be very careful about buying it, there's nothing on the chart that's bearish. You got to lose the red line under 79 to tell me that there's more of a break. Maybe you can get all the way into wherever the 18-day average is, but I don't see it yet. As I mentioned yesterday, Starbucks wish their chart looked this way. Look at Brothers. They just keep moving on. They've latched on. This is what we call the Gorilla Glue trade. I named it after Gorilla Glue because once a market latches onto a Bollinger Band, the next step is it tries to take momentum, and what was overbought locks in when you get the red and the blue lines. They're called the K and the D, and the only difference in them is a time frame. The K number, which is the red, uses 3 days or 3 periods of time, depending on what chart you've got it on, and the blue line uses 5. Got it? And that's the whole difference. And when they latch in and they get over 80 and they just stay there and this is going, you don't even think that for breaks. This market can just keep going on and the shorts are caught. CrowdStrike doing exceptionally well. Palantir doing exceptionally. I think Palantir was up $10 today. You can see how Rivian held that test that you and I were talking about here. The 200, the 100. Now, you have an outside day up, but you close near the day's low. Be careful. That could say if you get under today's low that you want to come back down. You can see the correction. You can also see that the market's hit its upside target. Let me show you. Whoops. You have the bearish embedded reading, just like we talked bullish on the other charts. But when you lose it, and here you close 2069, if you can get over 21, that's all you're looking for. It doesn't mean you can't go higher, but that's the objective. And notice how the market is just sort of stalled there. Other people see what I do. In K-Web, this is the Chinese internet. I still see this market wanting to slip back. It's overbought. Here's what you have in the markets. You have the swing line down. You have the bias up. The market is fighting now to stay over the 100-day average, and bigger support lies at 30.24. I'm neither bullish nor bearish on the market. Toll Brothers, I was looking for a battle, and I said it to you yesterday here, right at the 200-day average in the 18. You're getting it. Now you've got to clear Wednesday's highs, and close over that to get friendly the market. When you come to XHB, it's not quite the same plan. It's the 18-day average, not quite because the averages are far away, but same thing. Now you'd have to take out today's high, close over that, and then maybe you'd get the 115.65 objective. What you need to see are interest rates falling, and I haven't seen that just yet. I'd like to see it, but I haven't seen it. In XLF, the financial services, this market caught the bears. Let me show you. When you lose an embedded reading, and you hear me talk about that under 79, you often then, this is your target. But what's the only time you can re-embed? The day after you lose it. After that, it's not the same. It's exactly what it did. It caught the bears. That to me means you got 5303 is another open number before you get back to the 18-day average. So it's a whipsaw market as I'm viewing it. In XLI, you're just caught here. You're sitting on the 100 and the 18-day average, the trend up, the bias down, and the market has just seen all the volatility, for the moment at least, come out of it on the energy sector. On XLE, you came up to the combination of the 18, the green, the 100, and the gray, the 200-day average, all came together, and the market paid attention and got thrown back from that with an outside day down. So, if you take out today's high, Friday or Monday, that would be a sign, they're catching the bears. Barring that, you've opened the door up again to get to 87.27. In the gold market, I was telling my clients, at least, I'll tell it to you now because they already did it, and they did it before I mentioned it here. Take something off the table. Again, cut your position down. Don't get out of your position. Cut it down. So if you own 100 shares, you're selling X amount. You're over the band. Look for the market to pull back. This move isn't yet over. It will be if the red line closes under 79. Hasn't closed under it. Silver market is trying to join gold. It's saying, hey, I want to embed. I want to join the party. I want to be bid up. And that's what it's trying to do. Hasn't done it yet. And in copper, it's waves. Follow my hand. Isn't that cool? But that's what you've got. You went from the up to the down, back to the 18-day average, back to the Bollinger Band, and back here. You're getting killed unless you're a day trader in a market like that. That's not a trending market. Could it be a base for a big move? It most certainly could. Could it also be a top? Yes, we have to see which way out of this sideways action that's been going on since the beginning of the year the market breaks out. For the moment, the bulls seem to be in control. In BND, overbought, sitting up here. Now, you know what the Trump administration wants. Scott Bessert said it today. He said, very simple. We want to see the 10-year note go down. So you pay attention to TLT and BND and see what they're doing. In the dollar, you've slipped back to the 100-day average. If you take out the lows of Wednesday, why not go back into the 29.01 to 29.10 zone? You could. Market could easily slip there. And in the euro, you fell back to the 18-day average, trying to find support at that number, as you still got the swing line down, but the bias up. So you put it all together, you try to come up with game plans that you can work with. And that's where I like to come in and work with you. You know, besides putting out my videos for my subscribers in the morning where I tell them, buy here, sell there, use this stop. I want you to do it this way. One of the other things is we like to teach some of the techniques, and pivot points are one. And I teach this for free. So it's a 3-part video series. You can go to our website, you go to free offers, you sign up for it there, and then we send you the link so it all plays. It'll play from our website. You probably have this tool in your charting software. If not, ours certainly have it in everything we're doing. And I tie it together with my version of slow stochastics, trying to show you how to maybe, just maybe, momentum leads what the pivot's going to do, and where it's telling you, hey, I'm overextended up or to the downside. You want to take the course, then you'll know more of what I'm saying. IraEpstein.com, free offers. Move your cursor to the top here. You'll see an icon. Give that a click, and that's how you get it. I'm Ira. You have yourself a great day, and I'll catch up with you all tomorrow. Take care.